Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1091st edition of Short-Term Trading Live with Oscar Carboni. 1091 educational videos. Traders, if you'd like to hook up with me, just come on down to livewithoscar.com. Come into my free chat rooms. All right, let's get moving. This video is being filmed on Sunday night for trading Sunday night through Monday, October 14th, 2013. Traders, we are looking at a green Omni, rock and roll, another green Omni. Thank you, Mr. Boehner. Futures trading can be extremely risky and cause substantial financial loss if you don't know what you're doing. Futures trading is not suitable for all trading accounts. Do not trade the futures markets, especially without stops. If you don't know what you're doing, run. If you do know what you're doing, always play with stops. All right, traders, so green Omni, E-mini S&P daily bar chart you're looking at. I am here to tell you new highs are coming. Undoubtedly, new highs coming our way in the E-mini S&P. It looks fantastic here. Traders, when it bounces off this line, it makes a new high, and then it hit this line and it made a new high, and now it hit this line and it's going to make a new high because that's what it does. Let's go look at the Dow Jones Industrial Average. Traders, the Dow Jones Industrial Average, it augurs for new high levels. This is pleading for the market to go higher. Again, come down to this red line, go up, make a new high. Come down to this red line, go up, make a new high. Come down to this red line, go up and make a new high. Come down to the red line. I think you get the picture. That looks pretty darn good if you ask me. But let's take a look at something else. Let's move out a little bit in the E-mini S&P. Let's see what a weekly looks like for us. If you pull a weekly on the E-mini S&P, take a look at this. The E-mini S&P held this spot, held this line 17 weeks and counting. Actually, more than that. It has been respecting this line, and I'll tell you what, it looks fantastic right now. And on the weekly, it absolutely looks like it wants to go higher, referring to the E-mini S&P, the stock market in general. But I've got a little more evidence I would like to show you, traders. Let's put this guy back where he belongs for now. I've got a little bit more evidence I would like to show you, and I think you're going to find quite convincing. Let's move over to something. Well, let's start with gold, in fact. Let's go there. Traders, this is your gold. I've been showing you this daily gold chart and showing you this head and shoulders would lead to a downward break, and it did. And this head and shoulders would lead to a downward break, which it did. And that this was a bear flag in the right shoulder of the first head and shoulders. That is bearish. It went down. And it went into another bear flag, which we knew would be bearish when it hit this spot right here. And we called that for you. And since we've been going down. So, is the S&P going back up? Absolutely, if gold is going down. But that's not the only reason. The gold daily looks bearish, right? Look at the gold weekly. Traders, look at this chart. This is a masterpiece. This gold weekly I've been showing to you in video after video. Let me tell you one thing about a market. Let me go back real far here for you. This is gold as far back as the 200 bar average will give me on the weekly. And if you'll note, following that line right there, here is what's so important about gold and that 200 bar moving average. In a bullish market, the 200 bar moving average does not get violated like it did right here. Then we drop, we bounce off the bottom of this, nice little parallel channel, really big parallel channel, and we morph into a shoulder, head, shoulder on the weekly. We are coming down from that. Minimum target 1189. I think we go even lower than that. That's your gold daily, your gold weekly. Does not look bullish. And the gold was bullish when the stock market was bearish from 2009, or I should say 2008, through really 2011, 12. Nobody knew for sure what was coming. But now people feel comfortable with the United States, and they look at these charts and realize that these E-mini charts look fantastic. The stock market chart, the tranny chart, that whole package looks great. Then you see gold, the end is in. It's been cracking since. Traders, do you realize that Omni gave us the call when gold was here? Omni gave us the call and said this is the end right here at this level. If I move this little arrow, Omni gave us the end in gold up here around 1680. It has cracked severely since, and Omni for sure knew the end was coming. Well, first of all, it would never make the call if it didn't think for sure, but once we broke that, it becomes very, very severe. So gold does not look good. Gold looks like it's going lower. Even if it has rallies, you should be selling gold. So that's what we've got in the gold. But there's another thing that I think will really convince you. And that's a beautiful chart I have here of the VIX, traders. Let's look at it. This is your VIX daily bar chart. This is your VIX weekly bar chart. Excuse me, traders. This is a weekly. I have mislabeled that. Let me just put weekly on there. This is your VIX weekly bar chart. On the weekly bar chart, very interesting what happens when we hit this average right here. The market tumbles. We hit this average. The market tumbles. We hit this average. The market tumbles. Guess what we hit last week as of Friday? Well, Thursday, really. We hit the average and the VIX tumbles. That is a typical market recovery sign when you are looking at the ES or stock market. So this absolutely has me convinced that we are right and that the stock market goes up. The VIX has run into its good old-fashioned friend here where it runs into trouble every time. And that's what I'm expecting to see, more downside action, just like what happened here, and what happened here, and what happened here. And as they say, how goes the VIX? The opposite goes the E-mini S&P. I love hearing that. Traders, the E-mini S&P, please remember, this is what it looks like. New highs are coming. I kid you not. That's what we're in for. And always remember to keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Traders, thank you so much for watching my videos. Come on down to livewithoscar.com. Come to my free trading rooms and allow me to help you become a better analyst and a better trader.